available? Marc, where's Marc? Well, Marc disappeared. Damien, watch for Marc to come back in, okay?
Yep, we'll do.
All right, welcome everybody. We're going to get started here in just a second. All right, let's go ahead and start the recording. I'll go to speaker view. And let's go with record to the cloud. All right, we are live. This is Richard Roop with richardroop.com, and this is this month's Ultimate Training Webinar for January 2021. Happy New Year. Happy New Year, you guys. Hey, Damien, how are you? You're going to be kind of my co-host until Marc gets here. How are you, buddy?
I'm doing fantastic.
All right. All right. Oh, there's Marc. We'll let him back in, and we'll go ahead and... Oh, he disappeared. Oh, there he is. All right.
Sorry about that.
Hey. Hey, how are you?
I'm doing good. How you doing?
I'm doing good. I just opened it up. We're ready to get started. You ready to get started? We're going to talk about raising private money.
Yeah, I'm excited about that. I'm all prepared. I got my notes in front of me.
We know a few things about this, don't we?
Yeah, we've done it before.
I actually... I have a boot camp, Raising Millions in Private Money, and I've done that a number of times. And, you know, when you spend 3 days on raising private money, when we're going to talk about the basics just tonight in 45 minutes, right? So we can really drill deep into what to do, but what people don't do is usually caused by the inner game. In fact, Willie Hooks, our coach, he wrote a book, The Inner Game of Private Money. You guys might want to look that up on Amazon.com. The Inner Game of Private Money. So let me go ahead and show my screen here. Let's see here. There we are. Okay. You see that, you guys? Marc, you see that?
Yeah, I do.
Okay, so we're going to cover the best practices for raising. But what the ideal situation, isn't it? Wouldn't it be for private lenders just waiting in line, Marc, for you to fund for you to find a deal so you can use their money?
That's right. Yeah, they should be bugging you.
Well, yeah, and you can set it up. That's where you want to go. That is kind of your goal, is to have people waiting in line for you to use their money, as opposed to you worrying about how am I going to fund my next deal. Okay, right. And we know, as Marc, that some people won't even get their marketing out, or they won't return the phone calls from their leads, or they won't make offers because they don't have their private money lined up, and they're concerned.
Standing in their way. It's like an obstacle. It's like an obstacle.
It's a mental obstacle.
That's right.
So when should you start your private money program?
Immediately.
Tonight.
Yep, immediately.
Tonight. So we're going to walk you through that. So if you just got on here without registering, go to Repodia.com, and then right at the top there right now, you can enroll for this program. That will get you the replay. And I did send out a handout today. You might have the handout that we're going to go over. And this is where the replay will go. So register for that, so you'll get the replay and any other support, bonus support that I add. So Marc, you can go ahead and mute yourself out. Or I'm getting some noise from somewhere. If someone wants to mute that out for me, Damien. Thank you. All right. And then at Repodia, we got Roop links. So, you know, to my website, to my Facebook group, to all my social media.
If you help, I can help you. If you make me a co-host, then I can help mute some of that background noise.
Well, you know what? We did that once, and then you disappeared on us.
You know, my computer just decided to, I don't know why. I'm sorry. I've never seen that before.
You are a co-host now.
Thank you.
Yeah. All right. Yeah, you are a co-host now. All right, good. All right, thank you. And then when you're signed up for this webinar tonight, how to raise private money to fund your deals, there is a support page where we'll put the replay, and we'll upload the handout in case you didn't get it today when I emailed it out. There's also a special offer I'll talk about. We have this Raising Millions in Private Money Bootcamp, and we recorded it on video. It's a great program. It's got the full manual, and then it's got all the tools and marketing, the forms, the contracts, the private money lending tools that I've created. And then we did the boot camp again, and then we audio recorded that. So we got 2 boot camps on audio and video, plus the manual that we'll take a look at part of that tonight, and all the tools. And that package is $897. So you can go to Rupodia.com anytime and get that collection, that bundle for $897. And then I'll give you kind of unlimited support as far as checking into, if you want to show me any of your private lending tools or approaches. I just want to make sure that you stay on the right side of, the SEC laws or the Division of Security laws, that type of thing. We'll talk about that tonight. But there's also a special deal. It's only for a limited time. There's a link, this link here, you can get it for $397. So you can get it for $500 off. I'll leave that up for a number of days here. And then that will expire. So that's a coupon that you can always use, well, for the next few days, 500 free, or just click this link, okay? But we'll talk about that later. And then that's like the ultimate thing I can do as far as helping with private money. All right, so let's take a look at the manual. This is what I did for this presentation, Mark, is I took the manual for Raising Millions in Private Money Bootcamp, and then I just took some of the pages. I wanted to go through some of this as a way of introducing the concept, and then get into the nitty-gritty. There's basically 6 things that you do to raise private money. So we'll spend a good amount of time on these exact, 6 things to do to raise private money. But in this manual, here's the table of contents. We cover the problems today, the newest opportunities, the key solutions. We go over $1 billion mindstorming. And by the way, if you go to Rupodia.com and you go to the private money, let's see, in Denver, if you go to that course, you'll see the contents, and you'll see that $1 billion mindstorming is open for a preview. So I recommend you watch that 1.5 hours on $1 billion mindstorming. It's a great exercise that we went through. That's available as a preview there. Then, what's important to you about your real estate business? Whenever we do a boot camp, Mark, as you know, the introduction, the day we start off 2 or 3 days of intense instruction, we talk about, what's important to you about your real estate business, and what's important to you, as far as what kind of goals and objectives do you have. So when we do a private money boot camp, it's like, why is private money important to you? What's important to you about that? And then let's set some goals and objectives. And when we did this private money boot camp, our goal was to go ahead and raise $1 million. I think it's $2 million, $2 million in private money, line it up within 60 days. Okay. So that was the goal of this boot camp and this training. Okay. So we that's how we designed the instruction on how to exactly to do that. All right. So then we go through using private money. And what are you going to use your private money for? You're going to use it to raise all the cash you need to buy houses. Okay. Because we don't recommend you use your money to buy houses. Okay. And there are some questions that we go over as far as, okay, well, once you have all this cash and all this money, what do you do with it? Well, you don't use it to buy houses. And a lot of my buddies that have made millions and millions of dollars, they are actually using their money to buy houses. I don't recommend it. They've been doing that without my permission. And they have hundreds of these free and clear houses, that are just throwing off cash flow. But it's their money tied up in the deal. That's fine. That's good. But when you get more money, you can actually get a very high rate of return by, for example, paying off debt that you've created with owner financing at a discount. Huge returns on that.
Yeah.
Getting other debt paid off at a discount. there's other ways to get huge returns, almost guaranteed returns, because when you're paying off debt at a discount, it's like a guaranteed 35 to 300% return, guaranteed. So as opposed to speculating. All right. All right. So raise all the cash you need to buy houses. You're going to use this private money to fund all deals with none of your money. Then we're going to talk about, what's a private loan? What's a hard money loan? The difference between a private investor and a hard money lender. So, and the difference is a hard money lender is in the business of loaning out money. I talked to my good buddy Tim Mai today. We did the 7-figure lifestyle business challenge, and the recording of that is in Rupodia.com. And he's a hard money lender. And he was, we were in Clubhouse today on stage talking to other investors about building their business. And he's a hard money lender. So he charges 12% and 2 points. Okay. And he'll go up to 65% loan to value. So he has his money is available to fund your deals. Now, when we're doing what we call the ultimate strategy, and we're funding deals with where we're getting long-term 0% owner financing from the seller, and we're bringing in the small private money first. Those, Tim's money's available for that, right?
So is
and
mine.
Since it's a small amount compared to the, yes, and yeah, and that's the thing. The more people understand this model, it's like, I got money, I can do that. Yes,
I've got an unlimited source of funds available. Unlimited.
Okay, good. Because we have people that think, you know what, I don't have any private money lined up. If you have a deal, the money will follow. Okay,
yeah, that's right.
But you might as well go ahead and put together your program and be able to explain it to people so that you can line up your private money. So like Marc, he's in the business of loaning his money out. So
right.
You're going to follow his guidelines, right?
Yep.
He's going to dictate the rules, right, Marc?
Yeah, and it's very expensive.
But, and it's very expensive. There you go.
It is. It's very expensive.
And then but
I
when
don't
you
want
get
to be
your
the
own
cheapest money
around,
I charge 15 and 5. So, and that's every 6 months, 5 points. So that's 25% APR.
Yeah, and that is fine for someone who works those numbers into the deal and they don't want long-term private money. Because
right.
Hard money is typically not long-term. That's another difference between hard money, your 5 points and 15% interest, right, for 6 months term.
Yep.
That's hard money.
Yep.
But there's people that can make a ton of money using your money, right? Because they're going to fix and flip and that
right.
type of thing. But if you're going to buy and hold, you want at least 3 years with your lender, okay? Preferably 5. That's my program is 5 years, but I'll do as little as 3. But if I have a 9-year deal with my seller, I'm going to ask for 9 years of lending with my private lender. Now, it's probably not going to go that long because it is high. As I get cashed out of deals and as I raise this cash, I'm going to pay off this highest interest rate debt. When I move a seller's 0% mortgage from one property to several other properties, turning debt equity into cash that I can spend, I'm going to spend that money paying off Marc and then paying off Tim, right? And then paying off anything else, right? That has interest.
Yeah, and that's like you said, it's a business. So that's not what we're seeking. We're not seeking hard money lenders, but that is available. Just know that money is easy to find. Private lenders is what we're talking about tonight.
Yeah, private lenders and and that So what's the difference? So there's the difference. So in the boot camp, of course, we talk about how to find private or hard money lenders and how to find private lenders and how you pre-screen your private lenders. Then we talk about these 6 steps for raising private money. So that's what we're going to go over tonight because we only got about 30 minutes left, right? And I want to walk you through those 6 steps, okay? And then we go over the marketing and advertising for private money. And I'll tell you right up front, the way to advertise for private money is only advertise to people you already have a relationship with. So basically, you're going to use my marketing tools, my postcards, my flyers, my business card text, all of that stuff. You're typically going to use it to either offer free information to the public, or you're going to use it really to follow up on people you already know. If you want to build a list of potential private investors, we cover that in the boot camp, but it's really offering just free information. You're not doing any type of solicitation. You're not saying, hey, I got a program where I can take your money. You're not saying that. You're saying, hey, do you realize that you can take your idle cash or retirement funds and get a very well-secured return on your money as a private lender, and explain how it works without offering to do it for them? Does that make sense, Marc?
Yeah, of course. Yeah, there's very specific rules, guidelines, and laws, and you want to make sure you follow that surrounding advertising. And so what Richard's recommending is we don't advertise. We don't advertise.
We don't advertise, but if we want to, get a hold of people that might be interested, then what we do is we provide education. Okay, we provide
information.
And that's how all my marketing is designed now. And one of the reasons, Marc, I'm offering those private money, those 2 private money bootcamp recordings, plus all this stuff, all these marketing tools and all the forms and contracts, is actually I want people. I'm doing that instead of $897, it's $397. I'm doing that because I kind of want the agreement that, hey, I want you to get into it and tell me if there's anything that you feel. I want you to review it. And what's missing, what do you need help with, and what questions you have based on, since it was actually created, like 10 years ago or whatever, right? It's all the same stuff, but I also, I need some users, just like I started with coaching. I had some few coaching clients so I could set up coaching. Well, I want some users of this package so I can go out and promote it for $897, okay? With some ongoing support. So if you get this offer, I'm going to just give you unlimited support if you own this package, because I want to make sure that if you're going to do anything with private money, you're going to do it with it right, as far as creating tools and stuff like that. All right. Then we covered managing your leads and your clients, SEC issues, like you said, the laws around soliciting private money, hiring help to get help to do it, and then marketing examples and documents and tools. So this is about this document here. Let's take a look. The original manual is 161 pages. I went ahead and mailed out 26 of these pages to everybody in Roopodia. So you would have got that. You could have downloaded it from the email I sent today. And this is the document I sent out. So our outcomes for that bootcamp is provide a plan for lining up $2 million of private money to fund your deals in as little as 60 days. That's the goal of the training. Answer the most common concerns, questions, and objections. Help to instill the proper mental mindset for challenging limiting beliefs, building your confidence, and reducing the fear that stops you from taking action. Reveal the best ways for using money, including financing new deals, refinancing existing properties, and funding your operation. We're going to talk about that tonight. Explore how private money can use to fund your subject to deals, because Marc, if you can get a free house subject to, you can go broke getting a free house subject to if you get a bunch of them, because doesn't every free house that you get subject to, if you just get it for what's owed, cost several $1,000s, to get it, prepared, right?
To get it.
We've learned that.
Yep, it does.
So you can actually buy these high equity subject tos and have them funded with private money, different ways to do that. Let's see. And then your free and clear deals, like we talked about, small private money first on a free and clear property so that we can give money down to a seller. We can fund the deal. We can put extra money in our pocket because we need operating money. We need to write ourselves a paycheck for running our business. To fund your all cash deals, close on your wholesale deals, your short sale deals. Now, wholesaling, some people think of it as flipping contracts or flipping properties, but it's really the process of finding properties at a discount. So you want to be able to do that, and you are going to do that if you follow my marketing and you become a real estate entrepreneur And even if you're a creative deal structure, like we teach, you're going to find deals that you can buy at a deep discount. They're going to accept your lowball cash offers. So you will find those deals, but your advantage is you can actually pay more by getting creative on the terms. So the people that are out there calling themselves wholesalers, basically they're in the business of finding, properties at a discount. All right. Looks like my internet is unstable. So, all right. Hopefully you got.
I can hear
that.
you fine.
All right.
Yep. Everything's
Okay, good. All right. And then our outcomes are to show how you use these funds for growing your business so you can invest it into your marketing, into your systems to leverage yourself, outsourcing, and delegation. That's what we call business level 3 growth. Discuss how to raise money for paying off balloon notes, paying off seller carryback notes at a discount. That's a huge profit center. You know what I learned today, Marc? Ross Hamilton, he created Connected Investors. Do you know Ross Hamilton?
No, but I know Connected Investors.
Well, it's his company. You know how he launched his company?
No.
Okay. Well, he told me today on Clubhouse. He said it was the technique that he learned from me helped him launch his company. It was the substitution of collateral that he learned from our training, from our, I guess, an event or whatever. And he got this deal, and instead of making 100 grand, he was able to make 300 grand on this land deal because of substitution of collateral. And he attributed that, being able to raise that money, to launch his information marketing business, which is one of the biggest social media platforms for real estate investors, called Connecting Investors. And he told me that today, and I had no clue. I had no clue that it was that story. So I want to talk to him again offline about that. Seller carryback notes at a discount, funding all your buy, hold, and fix up costs. That's what you use this money for. We want to share strategies for getting private lenders to accept lower rates and longer terms. We talked about the difference between hard money and private money. Hard money, it's going to be shorter terms and higher rates and some points, some costs. Private money, we can actually have a program, but then once we have a lot of money, we can actually start getting, our program can be at lower rates, and we can just be, get a little bit more picky on who we use and what terms we offer. So we're going to talk about creating your program, what that means, because that's how you have to create your program in order to raise private money. And then the outcome of the boot camp is a build confidence with tips on how to avoid violating SEC rules. Okay, so all right. Now, what's great, Marc, is in this manual during the boot camp, we covered the 4 levels of entrepreneurial success, which we've never recently got down and dirty into, right? I think everybody needs to know. We haven't done this. Yeah. We used to do it all the time. Yeah. Yep. So level 1, we're not going to do it right now, Marc, but we can if we have time. But it's in this document that I sent everybody, and that will be on the support site for tonight. So this is actually the 4 levels of entrepreneurship related to private money. Okay. So level 1 is tech, getting prepared. And then level 2 is marketing, sales, and systems. All right. And then level 3 is outsourcing and delegation. All right. And then you do want to do more. Maybe we'll cover that. And then level 4 is cash and financial independence. Okay. So what you want to do as the CEO, owner of a multi-million-dollar real estate operation that may have not deposited that money in their bank account yet, what you want to do is you want to spend your time on more, M-O-R-E. That is the best use of your time. You want to, get help, right? Hire help, get things off your plate and do what you love, or do the high-level activities. The high-level activities in this real estate entrepreneur business is marketing, okay? You should be managing the marketing. Offers. You should be making offers to buyers, to sellers, and to private lenders. Okay. R, raising cash. That's working and building your relationships with your private lenders, people that are going to fund your deals, as well as, getting out of your, running your exit and getting cashed out. So you got to raise cash for your business. It's either by selling property or borrowing against properties that you buy or own. And then E, exit. Working your exit. So as soon as you get a deal, a contract, it's like get it occupied or get it sold or get it flipped or get it fixed, whatever you got to do. So you, as the general manager, you got to make sure those things happen. That's where the high leverage activities are. So, and everything else beyond that, you should try to systemize, automate, delegate, or outsource. All right. We have whole boot camps on that, level 3. Okay. So section 1 of this manual is just the introduction. Then we did $1 billion mindstorming. We talked about what's important to you about your business, and then using private money. Okay. Like we said, we kind of started walking through that. Now let's talk about
the 6 steps.
The 6 steps to raising. Huh? What's that?
The 6 steps. The 6 steps. Let's get into it.
Yeah, this is it. Okay. So number 1, the first step in raising private money, and it doesn't get much more complicated than this. It's these 6 steps. Okay. Actually, I'm going to simplify it even further. But step number 1 is you got to know your program. Okay. So what I'm going to do, Mark, is I'm going to explain my program. Now I have a Q&A, a private lending Q&A tool. It's in all of my programs. If you have the Ultimate Strategy Home Study Collection, or if you have the Free and Clear Cash Machine, or if you have the Raising Millions in Private Money, if you have the Cash Now Secrets, 5x5 system, or Strategic Marketing Secrets, you're going to have a copy of my Q&A, my private lending Q&A tool, okay? Because you need that. It's to make it easy for you to put together your program, and then that's a tool that you can use as part of your presentation, to get familiar with the program yourself, to create your program, and to explain your program. It's a very powerful tool. That's why it's in all my home study courses, okay? So once you put that program together, this is my program, for example, okay? I pay lenders 7 to 8% on a first lien. I prefer paying monthly interest-only payments supported by the income from the property, but I can pay principal and interest payments, okay, if the cash flow's there. And then, or if that's what the lender wants. Interest-only payments keep my lender's entire investment working 100%. So if they give me $20,000, $20,000 working every month because I'm paying them just interest only, okay? Now, I pay my private lenders 9 to 10% interest on the smaller second liens. I prefer to have their interest accrue with no monthly payments because it's a smaller loan and it's just, it's my preference. I don't want to be making these smaller payments, right? And then my lender can earn interest on interest because I allow it to compound, okay? Interest on interest. And it also helps me avoid negative cash flow if I can raise some money on a deal, some cash, but not have any payments and just have it come out of my back end later, okay? That avoids negative cash flow. I prefer that my note payments are due on the 15th of the month. That's my preference because I have my other income coming in, on the 1st and the 25th. My minimum investment that I'm going to accept, well, it says 10,000. It's really probably 20,000, but you got to decide what there's in order to go through the process of setting up a note and secure it on one of your properties. You want to answer these questions for yourself when you put together your program. So I'm telling you what my program is. You can decide, these specifics for yourself. So what's your minimum investment? Now, Mark, what's your minimum investment as someone in the business? What's your minimum?
Well, when I was running a fund, our minimum was 50,000, and that was documented. But typically, I'll take 30 right now. So 30 is generally my minimum right now.
Now, Now let me ask you, in the early stage when I was teaching you how to raise private money and put together your program, what was your minimum? When you were just getting private,
10.
just normal
10,000.
friends and family, people you know?
Yeah, 10,000.
What was it? 10.
10,000.
That's
Yeah.
where you started. Yeah.
That's where I
All
started.
right. All right. That's where you started. All right. And then it looks like, okay, my program is I'm confident that I can pay off my investor within 60 days with 60 days advance notice by replacing them with another private investor. Okay. I might, okay. So I actually got sued by the Division of Securities of Colorado because they said by paying one private investor off with another private investor, that's called refinancing. They
Right.
said that was a Ponzi scheme because of the definition of a Ponzi scheme is paying off one investor with another. And they were saying that my notes weren't mortgages, that they were securities. Well, they were mortgages. They were deeds of trust. They were secured by real estate. Yet they called them securities. So they created a huge mess on that, right? But I cannot tell you not to pay off one investor with another because I think there's nothing wrong with that, right?
It's called the refinance.
As long as it's a refinance, right? So as long as there's, you're securing them with equity and they know what the equity is, and then there's full disclosure that, anything they need to know, yeah, do good business, you should be fine. So there's nothing wrong with that, even though I had some problems with that, which I still can't figure out. So, and that was just because I got targeted because of my position as kind of a guru. All right. So I will tell my private investors, look, if they agree to 5 years, it's like, this is illiquid. Your money is tied up for 5 years, right? But sometimes they'll ask, what if I want to get paid off early? In fact, that's right in my private lending Q&A tool. Okay. And so I explain it in there. And it does say, hey, this is illiquid. It's your buddies, you promised to have your money out for 5 years. I don't know if you guys remember watching It's a Wonderful Life, where they have the building and loan, and there was a run on the bank during the Great Depression, 1929 or whatever. There was a run on the bank, and so all the people were coming to the building and loan wanting their money early, and he's saying, well, you said you agreed that I could have 60 days in order to pay you off. So here's your receipt. I'll get your money in 60 days. And it's like, no, I want my money now. It's like, but you agreed, so just make sure that your lenders know that their money is tied up. But I tell them, if you want to get it early, just let me know. I'll do what I can. All right. And then what I would do is I would get a buyer closed or, go ahead and replace them with another investor. Okay. Now I don't know if you remember Rena. Rena used to work with me in my real estate business.
Sure. Yeah.
Yeah, Rena Hoffmann. And she was one of my private investors, and she got cancer. Oh. And she had a health crisis, and she needed her money. So I did what I could, and I got her money out. Right. So those things will happen. So you just do whatever you can. But if I couldn't, I couldn't. Right. Let's see. I offer a minimum earned interest of 6 months. So most of my notes are for 5 or more years with my private investors. The short-term ones are like 3 years. If someone wants to do less than that, I might do it pretending, but I have to find a specific deal where I want to be under a time frame of 3 years to pay someone off. Okay. So if they're going to make the effort of liquidating other investments or moving their money to me, I want to give them at least 6 months of interest in case for some reason or whatever, I paid them off within 6 months. They're going to get at least 6 months of interest. So that's my program. Okay. Now, since they probably don't want their money back that fast, I will attempt to substitute the collateral or reinvest the payoff. So yeah, if I'm about to pay someone off like that and they don't want their money back, then I'll see if I can secure that, if I have equity somewhere else where I can put them. Okay. Otherwise I got to give the money back, and then they'll be waiting in line, right, for me to find a deal for them. Okay. Because once the investors start using this program, it's great. They love it. it's the only thing about getting them started is number one, you knowing your program is, being able to explain it, know it's great for them. Once they understand it, they love it. And the way to get it, the way they learn to love it is to understand it, get involved, and see that it's really hands-free, it's really hands-off, and it does, it's designed to do what it says. Okay. So in my program, interest begins on the day the cleared funds are received by my closing agent or my escrow agent. So always have the money go to a closing agent. Could be an attorney, could be an escrow agent, could be a title company. You want to set up a note and deed of trust. Now, I have set up my own notes and deeds of trust, executed them, gave the note to the lender, sent the deed of trust off to be recorded, and then had them wire me the money. Okay, I've done that. But if in the beginning, just go ahead and use an attorney or a title company and just use an escrow agent. Okay. I give you all the documents to use. It's the documents that you use typically for private money, except for some clauses that I recommend you put in the documents. It's the normal note and deed of trust or note and mortgage that's used in your state to get a loan on a property. So it's nothing fancy. It's nothing specific for these paperwork wise. All right, my program is I never pull funds together. By the way, we are going to have some Q&A at the end here. So if you have any questions, we'll open up to Q&A at the end. We'll be able to call on you. You can also type questions into the chat. Damien, I think you're probably here going to help me monitor that as well. Maybe also we are live streaming, so maybe there's some questions on social media. All right, so I never pull my funds together. If I need one lender to fund a deal, I will get one lender, give one lender a lien, and then I'll give another lender a junior lien. Now, here's an update. I do not recommend you do that, Mark. All right, this is another issue I had with the Division of Securities, and I was warned by Roland Frazier. You'll see in the video of the Private Money Bootcamp, Roland Frazier, he's a former SEC attorney, and we had a great time. He was just like really trying to tear me apart as if that's what they'll do to you. And this is just a subjective area that they actually held against me, because I had a note. I had a guy want to invest $25,000. I put $15,000 on one property, and then I put another $10,000 on another property because there wasn't enough equity on the first property to protect the whole 25. So I split it up. When I split up his money like that, actually, I don't see anything wrong with that, but what they did is they said technically, in order for it to be an exempt security, it has to be sold as a whole unit. And since I split it up, it technically, right? One deal out of thousands, right? And they got me on that. So I think you can do it, and I would probably still do it, but I couldn't defend that there was nothing wrong with that before. So just so you know. All right. And so get some advice on that if you need. Otherwise, yeah, just find a see, that's not even what I'm talking about. What I'm talking about is if you need $80,000 on a deal, don't put a $50,000 second and a $30,000 third, because Roland said, hey, they will ask you, were you trying to, you needed $80,000 for that deal and you used two investors, so you're pulling your money. They can use that argument. So avoid pulling multiple investors on a deal. Find, even though I don't see anything wrong with that, by the way. All right, let's see. I will buy my lender title insurance when I'm acquiring a new property, but I'm not going to buy my lender title insurance policy if I'm borrowing against a property that I already own. Okay, so I already got title insurance when I bought it. I'm not buying a lender's policy for them if I already own the property. unless they ask for it. If they ask for it, I'll do it. Okay. Lenders don't really ask for this. But if I'm going to go ahead and get an owner's policy when I acquire a property at a discounted rate, I can get a lender's policy, might as well do that. So that's my policy. That's my program. I will always have hazard insurance on all my properties. And I was talking with a coaching client, Marc, one of our coaching clients, and she was asking, do I really have to have hazard insurance on the property if I'm buying it with owner financing and nobody's cares? It's not being required by like a bank. And I can't tell anybody not to. I would say it's all up to you. It's totally up to you. So to me, it's like I want that hazard insurance on the property in case it burns down. I don't like insurance. In fact, when I need it, when something happens, I usually try not to pay. But that's my policy. It will protect your investor and everybody else involved. Let's see. So you're going to add them on the insurance policy as a mortgagee, right? Next, I will never accept private money from my lender until they've received that promissory note, that security instrument, which would be a deed of trust or a mortgage, and it's been sent off for recording. Okay. I will never pressure an investor to do a deal. I listened to somebody today who's very kind of well known, and they were talking about how they really make an irresistible offer on their private lending and how they use all these sales techniques and strategies to get people to loan. And I guess they're kind of in the business of, they're actually probably licensed and they're just building a pool of investment money and stuff. That's not what we're doing here. This is really, hey, you let people know you have this opportunity, and if they're interested or not. If they're interested, you explain it to them and get them familiar with it, right? And then later, if you do have a deal down the road, you can call them and say, hey, I got a deal, you want me to explain it? And you can offer them a deal later. But after you've built that relationship, after they've been educated, after you know about them, then it's just like pass or play. Right?
And that word relationship is actually, the FCC defines that. I don't know if you knew this, but the FCC actually defines how you define if you have a relationship with someone. So if you meet someone off the street, you can't take their money for the first between 30 and 45 days if you just met them. So that's called the cooling off period. And the definition that the SEC uses as a relationship is if you know the names of their kids.
Really? That's their definition?
I heard that from an SEC attorney. Yeah.
Oh, wow. That's interesting.
And I'm like, well, I don't have any kids. What about me? And he's like, well, then you would know that the person doesn't have kids. So you have a relationship if you know if they, the names of their children or if they don't have kids. So that's the definition of relationship in the SEC.
Well, you know what? Those would be the first. See, everybody wants to know how they're going to advertise for private money, right? But in order, when I show you what to do here, what you should start with is the people who you know how many kids they have. That's a good definition. Yeah. I like that definition.
All right, good.
Those are the people you start with. That's good. I like that. We just simplified that. Cool. Because then once you've gone through that and if you still need money, then we'll take you to the next level. But probably all the money you need now and for the next deals for over your next year or whatever can be just those people that how many kids they have or no kids.
Yeah.
Thanks, Marc.
Yeah. I was able to raise all the money I needed for my house deals just with friends and family. It was only until we got into bigger deals and we launched the fund, we raised $23 million to buy those bigger chunks of properties that we needed to branch out.
What did you do differently when you were dealing with friends and family versus going through the big projects?
Well, the bigger projects were funded by accredited investors. So there's a difference. IRS has a designation for an investor, and it's based on net worth or income, and it's accredited versus unaccredited. And so most of my friends and family were unaccredited, and that's not savvy, basically not very savvy. And that's where it's more important to do things right and have a relationship and make sure they understand, the investment that they're getting into, because they're not accredited, they're not savvy. And once we got into the accredited investors, the presentation just changed. The approach changed. They were much more savvy. They asked way different questions, like, what's the pref, which is the preferred interest rate based on the, what's the yield on the security going to be, and so they just asked much different questions. So the approach was different. I was dealing with much different people, net worths of, several million, $100 million sometimes, tens of millions of dollars oftentimes.
What kind of rate were they after? That the people you were dealing with, what kind of yield or rate?
They were hoping to get something close to 10 to 12, 10 to 11, but the pref was 6. So we would sort of promise out of the gate 6. And then as securities were assets, as we were selling assets, then that was going back into the fund and then paying a little bit, like a bonus.
Yeah. So you were doing it following all these rules where you could actually, like, okay, here we're getting 6% plus a percentage of the results, type of thing.
Right. Exactly.
I don't recommend anybody do that with the private lender program, as far as, it's not necessary for you to say, okay, I'll give you 6% or I'll give you 8%. Then I'm going to give you a percentage of the profit.
Right.
Now it gets really complicated. Just make it simple.
Yep.
Yeah. Just offer. Are you going to offer 8% interest? Where can people get 8% interest these days? Right. On a very well secured note position. So anybody who understands real estate notes knows that if you're borrowing at 20 or 30 or 40 or even 50% loan to value, and you can get 8%. I mean, a lot of people would be happy with 6. All right. But go ahead and I would offer something attractive, 7 or 8. I like 8. So that's my program. You can offer more, but I offer a little bit more on a second because there is some risk involved. They have to protect a second. And we do explain that in our private lending Q&A tool. Okay. So my program is I keep all my promises. If a lender wants me to sign personally, I will do so, since I'm committed to taking care of them first if anything goes wrong with the deal. See, if something goes wrong with the deal, I'm willing to protect them. Now, I can't really put this in writing or guarantee it per se, but that's my philosophy, is if something goes wrong, it's not their fault, right? And I borrowed this money, it just happens to be secured by real estate. You owe the money whether it's secured by real estate or not, okay? You borrow the money, you promise to pay it back, right? However, if I never offer to guarantee my lender's investment, as that would violate federal and state rules and regulations related to securities, I prefer to sign as a trustee or president. So I don't want to sign personally, but I'll do it if they haven't asked. But I always sign as the owner of the property, which would be a managing member or president or a trustee, some other entity. You don't want to be doing this business in your name. It shouldn't stop you from getting started, but quickly you should be doing business under like an LLC or a corporation for liability protection and also some, tax benefits. All right. Next is I follow state and federal rules and regulations related to offering securities and seek expert legal advice as needed. All right. So that's my program. So your program, to create your program, remember, this is step 1, create your program. So now your homework is to create your program. Will you pay simple interest or compound interest? What interest will you pay? Will you pay a higher interest, on a second, or will you pay higher interest if there's no payment? Some people do that. I actually prefer to make payments on a larger note, so I don't have it go upside down on me. Okay. So I'm not going to pay more interest. Well, am I going to pay higher interest for no payments? Not necessarily. Will you do second liens? And if so, will you pay a higher rate? What day of the month? What's your minimum investment? How will you handle a lender's request for a payoff? Again, if you go through the private lending Q&A tool, you probably got it in one of your courses from me, then that will help you put together your program. And if you have any questions on that, get a hold of me and call roop.com. All right. Will you offer minimum interest? When will interest begin? All right. So that's step 1. Mark, anything else on creating your program?
No, pretty straightforward.
All right. Yeah, down here at the bottom, this is the beginning of the private lender program Q&A tool. It talks about what is private lending, how's the money going to be used, why do we use private lenders, and it's like a 9-page document. Okay. All right, let's see here. Okay, create your program. Next, create like a elevator speech. Okay, your elevator speech for private money should really be telling people how you buy and sell houses, and then you can work it into the conversation that you use private investors to fund your deals. Okay. Now everybody does have this emailed to them if they were in Rapodia, and they'll get it on the support site. We can take a look at this, but basically, elevator speech is to quickly grab someone's attention and pique their interest, and basically, cause them to say, "Well, how do you do that?" Or "How does that work?" Or "Really, can you tell me more?" What do you say to someone when you know or you meet about what you do? Review these examples and then develop your own brief script and then practice it. Marc, do you have an elevator speech that you might use if you were like,
at a cocktail party?
Do you have one for looking for? Yeah, at a party if you wanted to get someone asking you questions about what you do.
Yeah, and I've actually talked about this a few times this week with some of the coaching students because this is coaching week, and I was talking to them about the measure. What's your goal? What are you trying to achieve? You want them to start asking you questions. So you want to try to figure out how can you intrigue them, and not come across like you're up on a soapbox. And so I've raised a lot of money, so I've really played around with this a lot. And we were talking earlier on the call about mindset and inner game, and a lot of people just have a hard time talking about money and talking about themselves or talking about their business. So I think a very reasonable and common question that people ask is, what do you do for a living? What do you do? And so I'm always listening for that. So that's my trigger, because then I know, okay, so now I have an opportunity to either grab their attention or push them away. and so go ahead.
Oh yeah, I'm sorry to interrupt. And keep that thought. So what I was just thinking is that you don't have to bring up the fact that you use private investors in this first thing. If you're in the business of buying and selling houses, if you're a real estate entrepreneur, if you help people that want to sell their house by helping, by buying them, make it really easy for people that want to sell, you just buy it. And then, and you can pay a good, price because you hold these properties. And then you help sell buyers because you can finance buyers, or you can rent a house to someone and have them buy it later. So people that can't go to a bank and get a loan today, you help them. So that's what I do in my real estate business. And then I do pay all cash for properties, and I use money partners, private lenders that help me fund those deals. What do you do?
Well,
right?
Yeah.
So
and
what,
so
what else were you going to say about that?
The first thing, I take it a little bit slower because I want to try to see if they're interested, because sometimes people just ask, what do you do? And they don't really care. And so I try and like shock them or really just try and intrigue them. And so I'll say, and I try to avoid being like really like a network marketer, which, in my mind, I can just imagine them saying, do you like money? Yeah, I like money. Do you like to make money? I mean, that's the type of like, then I'm just, my walls are up. So I'm a little coy about it.
Well, Marc, I agree. I totally agree. That's the strategy and that's the approach. So I guess that's what people should do is they should really be focused on asking the other person about them,
right,
and get them talking about themselves.
Yep.
But once they start asking you, you need to have a way to explain what you do.
You bet.
Right. So you need this. You do need this elevator pitch, this elevator speech, but you're not just going to, gurgitate it out when someone says, "What do you do?" And this is not how we're going to deliver it. But right, exactly.
Yeah,
right?
Here's a 20. Yeah, here's a 20-second. No, because then what they do is then they shake their head, They're like, oh, that sounds interesting. And then they turn around and they walk away.
Right. But once you show interest in them,
Right.
they'll actually want to know what you do, and then you want to kind of let it out and create some curiosity and get them to say, really, how do you do that? Right. And then you can explain a little
Right.
bit more. But you got to have that information kind of prepared
Exactly
to answer those questions.
Yep, exactly. And so typically I just say my first response is I'm an entrepreneur. Because I've played with this a lot. Like I've played with this in different ways, different responses. But that I have found that people are curious about what entrepreneurs do. They maybe have heard of that word, and by the way, it's a French word, and so you can throw that out there. But I usually just say I'm an entrepreneur. Oh yeah, what is your business? What do you do? And then so now here is where I dive into. In a concise way, I'm going to try to explain what I do. And typically I'll say, well, I buy real estate and I typically bring in friends and family or other investment partners such as yourself into the investment and pay them a handsome return. And then I'll say, and then I always end with a question. Have you ever invested in real estate? Because I want to keep them engaged. If you just make a statement, then there's an opportunity to end the conversation. So I always try to keep them engaged and say, have you ever invested in real estate? And it doesn't really matter what they say, yes or no. And then what I say then is, oh yeah, well, I guess it kind of does depend on what they say, because I might go one path or another. How did that go for you? Or have you ever thought about it? A lot of times what I found is, my friends, they saw what I was doing and they wanted to get involved. And so recently a friend of mine asked me to participate. So I let him. And we had our escrow and attorney prepare the paperwork, and my friend's attorney confirmed that it was clean. We funded the deal through escrow, and my friend gets a check each and every month and loves it. The deal was clean, easy, and secured by real estate.
Okay, and that's great. Thank you. And then I also look for opportunities to talk about investments. So if someone's talking about the stock market or Bitcoin or any type of financial investments, right, or real estate, then I'd be looking for the opportunity to breach the subject.
Yeah, questions are always good. I always like to ask the other person something. I want the other person to be talking. If you walk away from an interaction, ask yourself who spoke more. If you dominated the conversation, you probably did it wrong, because I think the person that
you do. I can guarantee it.
Yeah,
I guarantee you did it wrong. Because look, if you let them talk and you're genuinely interested in them, number one, be genuinely interested and listen to them and look for things that you're interested in, looking for commonalities that you can, build that rapport and relationship with. Find out if it's someone you want to know, right?
Right.
And then if you let them do that, they're going to love you.
Yeah.
They won't know anything about you, but they'll love you.
Right. Ask them how many kids they have.
There you go. We got to work that into our script, right? How many kids you got? Oh, that's perfect. Hey, we're really building this up. That is great. We cut it down to one step. Walk up to someone, ask them this one question, and now you can go ahead and borrow money from them. All right. All right. Let's talk about your credibility kit, because what if they are interested, right? What if they say, hey, how do I learn more? Or, can you tell me about it? Or how can I learn? So what you want to do is even if they don't ask for that, you want to follow up on people. You want to build the relationship. And one of the best ways to build a relationship is, you get their card or their contact information, and then you send them a thank you note or whatever, or some information that you talked about. If they want some information, I would send them your private lender kit, which is basically your credibility kit, and then like a cover letter with maybe some information on private lending. So you're not soliciting, but you are educating them. So I have some tools for that. But on top of that, what you need for your real estate business is a credibility kit. So we're working with some of our coaching clients, are putting that together. A couple of them asked me recently, Mark, what goes in a credibility kit, right? So here's the list, right? Credibility kit would, and so if you get a lead from a seller, you talk to a seller, someone has a house for sale, and you gather some information, you say, okay, great, let's talk again. I'm going to work on this. I'm going to do my research. Let's have, whatever. In the meantime, that day, drop, you could email it, right? But I would also drop it in the mail. Go ahead and email it, but also drop it in the mail. You get a double hit. That's my recommendation. That's the best practice. But what goes in your credibility kit? So it should have like a personalized cover letter. So it should look personal, okay? So they know that you just sent it to them. It's not something mass produced, mass sent out. Any type of bio, information on your team, a mission statement, certificates like memberships, associations, awards, licenses, that type of thing. Testimonials from buyers, sellers, other investors, people like credibility letters, recommendation letters, CPA, attorney, banker, insurance agent. How you get those? You give one. You send a letter to your banker and tell them how much you appreciate the relationship. And then later you call them, ask them if they got the letter. And then at that point you can ask, hey, can you give me a letter, right? That's an easy way to do it. Otherwise you can just ask. You might already have these things, but you can build these things. Free special reports. All of my free special reports for buyers, sellers, and investors should go in your credibility kit if you have those marketing tools. Press write-ups, anything that was written about you and your company or your community service or things that you were involved in, any type of write-up, public relations, audio and video as well. You can send people audio files, DVD links, or DVDs, video links. So now we have the social media and the, the multimedia. Actual deals, so you can show them deals, on how you bought this for this, you sold it for this, you borrowed this much money, and the lender made this much money on it. You could do that type of thing. Associations, you should join associations. One of the reasons to join associations is, I think it's step number 4, okay? You want to be associating with more people because you're going to make, you want to let everybody you know that you buy and sell real estate and that you use private investors. You want to let them know you have a private lender program in case they're interested. And then you want to get to know more people. So join the country club, right? Join the Real Estate Investors Association. That's another place to get some people that are actually in the business of loaning their money out, or they're familiar with it already. They're actually could be good private investors, or they're kind of maybe hard money lenders. But your real estate investor associations are a good place. Business associations like the Chamber, the Rotary. Let's see, private lender info. That would be part of your credibility kit. That would be some of the tools that I give you. And then lumpy mail items. I like the $100 bill business cards, the customized pins, the magnets, custom keychains, audio DVDs and CDs. We really don't do that anymore. You can create it. This year I might create a shock and awe package that we might put together for people with their credibility kit. That's going to be fun. But do you think, Mark, that gives people an idea of what they can put in a credibility kit? It's just as much as they can stick in there. It's you're looking for the thud factor. The thud factor, right? Because they're not going to read it all anyways, but if you have it, if you stack it up like that, it gives you credibility. All right, step number 4 is create your presentation. The easiest way to create your presentation is that Q&A lending tool that is in my programs. Otherwise, you just use a written outline. Could be a brochure that you go over or some PowerPoint slides. We have examples of this in the Raising Millions in Private Money Bootcamp collection. But basically, like in that Q&A tool, you want to cover all the important benefits of your program to them in your presentation. What are the benefits? You want to answer their common questions, overcome common objections. You might use some examples and some testimonials, and then a call to action. Your call to action is, what are you going to do next? So you built this relationship up to the point where Now you're explaining your program. Well, normally at the end of your program, you're not going to offer them a deal if they're just learning about it. You could if it's gone that far, but you might just say, okay, now that you understand my program and you understand what questions you got, all right, now would you like to be on the list next time I have a deal? Like I send it to my active lenders. Would you like me to keep you notified, right? So they can go on the notification list. Or if you got involved, what do you need to do next? Do you have to have, move money around, or what is the next step for them? Okay, and if they're going slow, you go slow. That's fine. Okay. Now, a simple presentation, I think I learned this from Dan Durant, is you show them, you make a triangle, right? And you say, okay, a bank, if a bank loans 100% on the dollar on a $200,000 house, and they loan 200,000, they have zero equity protecting them in case of a default, right? And or if prices went down. They have no equity protection. So we say down here, no equity, relies on so that model relies on appreciation. That's what got us into trouble in the past. So they don't do that anymore. Now, even if they got like 20,000 down, that's a 90% loan to value. So 10% down and 90% loan, there's a little bit of cushion of equity, but not much. So if prices went down or whatever, and the cost of getting a house back, there's costs in that. So that's not real safe per se. But a lot of the deals that I do owner financing with my seller. So in order to fund the deal, I just come in with, in this case, 15% loan to value, or $30,000 on a $200,000 house. And then the lender on that has $170,000 cushion of equity in case, something went wrong. Okay. So they're really protected by the equity in the property, right? So that's the difference between, how a bank might loan money and then what I do in my business. So that could be part of a presentation. Do you have any questions on that, Mark?
Nope.
Where you're kind of explaining how private money works and you're kind of demonstrating how safe it is. All right. So, but you have to have a presentation. You have to explain your program. I usually use the Q&A tool, okay, and have a discussion because it's all laid out there. And then step number 5 is flap your lips to everyone you know. So what's step number 1, Mark?
Create your program.
Know your program.
Know your program.
Oh, you're right. Create your program, right? Well, then you would know it, right? Then, yeah, work on your elevator speech, right? You don't have to, you have to do number 1. You don't have to do number 2, okay? We recommend. Number 3, you don't have to do number 3. It's a best practice. You should do it, right? Number 4, create your presentation. I think you do have to explain your program. So if you create your program, you should be able to explain it. You don't have to have a structured presentation, right? And then number 5, flap your lips to everyone you know. So basically, all you have to do, Mark, is number 1 and number 5. Know your program, and then flap your lips to everyone you know. And who do you know? Always be on the lookout for an opportunity to deliver your elevator speech or talk about your business. Explain your program to anybody who shows your interest. Many of your best prospects will not be wealthy, okay? Right. Offer to mail information to anyone interested. Set appointments whenever possible to more fully explain your program or to deliver your prepared presentation. Work your warm list before ever cold calling or cold mailing. In fact, you should never do any cold calling or cold mailing. You may go ahead and do some advertising, offering information if you need to expand your private lender program. But you know what? The people you know, offering this as an opportunity to the people you know and the people you get to know should keep you busy, and you can actually make millions of dollars with a relatively small amount of private money in this business. But when you get to the point where you need more, then you can get more creative as far as marketing, right? All right. So like Mark went out there and he raised $23 million and in funding, but it was a different process. It's not the private lender process. Okay.
Right. And before
All right.
I got to that point, I had raised a bunch of money just exactly through using your tools and your recommendations. And one thing on here is I always ask for referrals. Is there anyone else you might know, especially when I'm paying someone off, anyone else you might know who would enjoy the benefits of a secured fixed payment income stream secured to real estate, something like that?
Right. Yeah. Referrals are big. I'm pretty sure it's in this process somewhere. Okay. So who's our market? Who do we want to flap our lips to? All your friends and family members, right?
Yep.
Business associates, employees, contractors, vendors, your dream team, fellow attendees at seminars and conventions and retreats, sellers, homeowners with equity, and retail buyers.
Yes, seller.
Real estate entrepreneurs, investors, and landlords, your previous and current private lenders plus their referrals, Mark. It's in there.
Nice. I see it.
Your previous private lenders, your current private lenders, and their referrals, right? Business owners, executives, professionals you meet, members of your local RIA, chamber, your Rotary Club, that type of thing, contacts made during business or pleasure travel, retirees, people with retirement plans, they have a retirement plan or an IRA, or it's a great use for an IRA. Your in-house buyer, seller, and follow-up list. So you should, whenever you get buyers and sellers coming to you on your properties, in your business, you should have a follow-up list, right, to convert them. But everybody you come in contact with should go into a contact list, which I think you should hit 3 or 4 times a year with some type of, postcard, newsletter, or greeting card, or thank you card, or announcement, or something to everybody you know. That's just good. It's just people won't do it, but it really makes a difference. And especially if you have a personal message that goes out. So your entire in-house contact list is who you want to know. So in my marketing tools, I have a little memo. It's the greeting card memo. And once a year, I send a greeting card out in November. And it's a calendar for the next year. And it has a little classified ad at the bottom with my website and a little, sell your house for top dollar on the day of your choice. We buy houses, and free recorded message line, website, our phone number, our name. That's it at the bottom. But when that card goes out, it's a Z fold card. There's a little memo in there that says, "Hey, enjoyed working with you. It's nice being associated with you during the year. Blah blah blah. As you know, we help sellers sell quickly and easily, for a fair price. And then also we work with buyers and we help them. And then we also work with private lenders who help us fund our deals. So we have what's called an all-in-one message where we talk about how we help buyers, sellers, investors. And we put that message out, 2, 3, 4 times a year just to everybody we know. I'm telling you how to build a multi-million-dollar real estate business. All right, media. So how do you get that message out? You flap your lips, right? But how do you reach out to your prospects? So you want to use your elevator speech. You want business cards, brochures, credibility kit, your presentation, like a PowerPoint, one-on-one meetings, one-on-one lunch, group meetings or lunch, audio CDs, audios, videos, online, offline, a real estate hotline, and a web page. Okay. And those are just different types of media to get your message out. I do have the Roop Design website that has a page for private lenders on it. I think I might have it in, I have it up here in one of these other manuals here I can show you. All right, and then okay, so that's number 5. Flap your lips to everybody you know. And then step number 6, follow up. Follow up on
Uh-oh, we lost you.
Lost you, Richard.
We lost you. Well, you want me to take over? Oh, got you back now, Richard.
testing 1, 2, 3.
Yeah, we're good.
Testing 1, 2, 3. Can you hear me?
Yeah, I can.
Okay.
Yep.
Did you lose me?
Yeah, I just lost you for a bit.
All right. All right. So step number 6, is that where we're at?
Yep.
All right. So step number 6 is follow up on your leads. You want to close for a phone appointment or an office meeting or a lunch. So if anybody's interested, then you just, you want to have an appointment with them, explain your program, build a relationship. When you're ready, deliver your presentation one-on-one. Take a new prospect. One of the things we used to tell people is, because they were doing so many deals, they needed more private money. So we said, look, just your goal as part of your marketing plan in your business and coaching, we keep them on a plan and we track it and everything, is just take one person to lunch every week. Just take someone to lunch. Think about someone you want to take to lunch that might be a prospect and just build that relationship, right? Right, Mark? That's the way.
Yeah, and how I set that up is I say, you know what, I've got something since I value your opinion and I trust your judgment, would you mind if I just ran something by you? There's something I'm going to roll out in my business, and I would love your opinion on it. So can we go to lunch, and I'll just present that to you, and then you can give me your feedback.
Yes. So you can actually invite them to lunch, and you can also tell them, hey, I'm working on this presentation for my business. I'd love to run it by you and get your feedback on it and get your opinion. And that's one way to do it. All right. How to develop more confidence offering your program. Know your program. Know what's good for your investors. Never beg or chase after people. Practice that elevator speech or explaining what you do in your business. Practice your presentation as far as explaining how your program works, and then help your warm market first. If you do that, you should have a lot of confidence, building your program, okay, and getting out there and taking action on this. All right. How to systematically offer your opportunity to prospects. Okay. So you have this document. All right. So those are the 6 steps. In the rest of this, this is page 49 in the manual. The rest of this manual, we have marketing and advertising examples. Then we have managing your leads. Here's an investor questionnaire. Here's some information on the SEC. All right. Now, Mark, have you ever heard that if you're dealing with less than 9 private investors, you don't come under certain guidelines or something like that? Have you ever heard of something like that?
Is that per year?
Having less than 9 private lenders avoids some rules.
Yeah, I have not heard that specific rule, but I have heard other rules like that. And I think it's a good and appropriate time to mention that this is not legal advice. This is education.
Yeah, no, you have to get legal advice. You have to get accounting advice. We don't give advice. We educate. We just teach. We just show examples. These are the best practices. This is what we do. You shouldn't do it. Not necessarily, unless you want to make a lot of money. All right. But yes, especially on this, you want to, I would, make sure your documents are good and check with your local. So what we're suggesting is you check with your state division of securities, and then you got the SEC rules, and then you got the state rules. But if you do mostly what I just said, you shouldn't have to be licensed, and you shouldn't have to be following, even if you're licensed, you have to follow certain rules. Like we were telling you what those guidelines are. I would talk to other people in your state that use private investors. They can help you out too. Okay. Now, this is actually in our business mastery program, business mastery for real estate entrepreneurs. It's a level 3 program. It's very advanced. It's to create a multi-million-dollar real estate business, growing a team. These are all the positions. This is in the general manager's handbook. You have your general manager, and you have your dream team, and we identify that. And then you have these functions of your business. Now, a lot of times you're doing all these functions: marketing, buying, selling, raising funds, right? Which we're talking about today, financial management, level 3 development. That's like getting more leveraged, and admin and then personal development. So these are areas that have kind of like roles and responsibilities. Usually you're wearing all those hats, but then what you want to do is you want to assign those things to other people as soon as you can and get them to take on those responsibilities. So if you were going to hire someone to take on the role of raising funds in your business, their mission would be to line up sources for cash and need that you might need in advance of its need. Their responsibilities would be working with the general manager to identify the funds needed and when, market for private investors, follow up and convert private investors, establish lines of credit, investigate and identify hard money lenders, and prepare notes and security instruments. So this could be someone on your team. By the way, I can recommend you check out privatemoneysyndicate.com. That's Tony Calloway, privatemoneysyndicate.com. They have a Facebook page as well. I'm usually interviewed by them once a month on their Facebook page. And he used to work in my organization as well, but he's got this private money syndicate, and he can help you set up a line of credit. He can help you refinance your properties, pull money out, fund deals. So go to his website, check out his FAQ, and then give him a call and let him know if you're interested about learning more. So he is in the business of brokering money. And so the lenders that he has, it's not the private money we're talking about here. It's typically, they want their money out for a year, and then they actually want you to, like, maybe they want to look at your credit score or they want to look at your experience. We're looking for, what we really want for our business is lenders that will look like Tim Mai, for example, maybe Marc, right? They'll look at it based on the equity. As long as they have enough equity position, and they get all the information on the deal, and they're probably okay taking it back if you defaulted. That's the business they're in. So they're not looking at your history or your credit or anything like that. That's called an asset lender. And that's what we're doing. All right. So performance standards. So this person would be, we would measure their performance by achieve funding goals on time, borrow at lower rates and fees. Now, this compensation, if you pay someone to raise private money, it's almost like they're being a broker. So you got to figure out, if you hire someone to do this, this should be, remember, you're supposed to do more: marketing, offers, raising cash, and exit. You should be managing that. So usually you're going to be doing this role. You're not going to outsource it. But if you did, you might want to get some advice, some legal advice on how you could compensate them, because you might have to be licensed or they might have to be licensed if they're dealing, depending on what they're doing.
Yeah, there's ways around that.
Yeah. So raising funds, their training plan would be, usually we put my programs in here, right, as part of their training, and then SEC compliance on a national level, and then Division of Securities on a state level. So in Business Mastery, this program, we have this mission, responsibilities, performance standards, compensation, training plan for all of these positions. And then, of course, we go much more beyond that. So that's a powerful resource. So I pulled that out of there for the Private Money Bootcamp. Then we have, in this document, we have all these display ads, flyers, business cards, brochures, guides, disclosures. We have documents and tools. And now this, if you got this document, I would recommend you read this by Michael. It's a little article on how to avoid SEC issues in your advertising. Guess what he says, Marc?
He needs to know how many kids you have.
Just about. That's what he did. He advertised on Craigslist for private money.
Yeah.
So imagine going on Craigslist and say, hey, I go on Craigslist and say, I got a house at 123 Main Street, and I'm looking for an investor to lend me $85,000 at 9% for 5 years. Is that a direct solicitation?
Yep, that's a general solicitation, so that's a violation.
And that, so you have to be following the rules on that, right? That's a public offering. And even if you're licensed or whatever, you can't do something like that, could you?
Well, you could put some disclaimers in there to say accredited investors only. So if you had a fund that was set up for advertising, so that you can advertise for certain funds. That's why sometimes you see these billboards that say real estate deals pay 5%. They've got a fund, and it's a special, special.
They're following the rules.
Yeah, they're following
certain. They know the rules. They're following the rules. So if you're following the rules, that just follow the rules. But you don't want to be making public offerings, because what he was saying is they actually have people in enforcement
at the SEC. Yeah.
Yeah, they are looking for that. They have people.
Right.
So he actually describes how someone responded to his ad, and then later he disappeared on him. And he found out it was like someone spying on him, right?
Mm.
So, and he got a cease and desist order.
Yeah, I see a letter.
Yeah. So you go ahead and read that article. I'm not going to go.
Cool.
All right. So that is what I wanted to cover. So this is the document that I'll put on the support site. I did email this out today. If you haven't registered for this webinar tonight, go to Rupodia.com and you can go to Rupodia.com/money, or right now it's right at the top of the homepage, and you can enroll, /money, and you can get free access. Once you have an account, I'll put the link in this account. Okay, and I'll announce it since you have an account. All right, these other documents that I have here, this is the ultimate strategy for buying and selling houses. There's 354 pages in this manual, Mark. That's the biggest manual I've ever done. On page 139, I believe, is private money, 138. Yeah, we have a whole section on, well, I don't know where it is. Yeah, we have a whole section on raising private money in this course. By the way, if you have the Ultimate Strategy Home Study Collection, or if you have the Free and Clear Cash Machine, or if you have Raising Millions in Private Money, or if you have Cash Now Secrets, or if you have the 5x5 system, or Strategic Marketing Secrets, I have those online at Rupodia. If you already bought these, I will go ahead and turn them on for you. Okay, even if you bought them 10, 15 years ago. All right, and I got a lot of other stuff. If you own them, I'll turn it on for you. But I have to do it in a leverage type of way. But in all these programs, the Free and Clear Cash Machine, Module 6 is on raising, funding deals and raising cash. And it's not just private money, and it's just not hard money. There's other ways to fund your deals. Okay. Then we got the Private Money Boot Camp, where we have a special. If you go to on this document right here, if you go, you can click on Raising Millions in Private Money as a product in the Home Study Collection. There's a coupon, 500 free. That's going to be good for a few days here or a week. It'll expire. You get $500 off this $897 package. So you get it for $397. Okay. I would highly recommend it. 1 year money back guarantee. It just, you can't go wrong. All right. So let's see. And I'll send an email out on that. Let's see. Module 6 in the Free and Clear Cash Machine. Cash Now Secrets. We have the ultimate game plan. We have the marketing game plan. And then we have the funding game plan. So we cover all the best practices for private money in that. The 5x5 system. We have our funding section on that. Let's see. Chapter 6, I believe. Chapter 7, funding your deals. Now, these are some more creative ways to fund your deals. And then strategic marketing secrets. That is the last course that home study course I created. It's all the best marketing strategies for online and offline for finding deals, for getting buyers, and for getting other investors as well as private lenders. So session number 8 is the best marketing strategies for private money. And let's see if I got any examples I want to show you in here. Let's see. Is there? Maybe not in the slides. All the tools are, oh, there's some postcards. All the tools are in the course. Here's that all-in-one message for buyers, sellers, and investors. It's on a postcard. There's the private lending page on the Roop Design website. And then there's the Q&A lending tool I've been telling you about. So a lot of resources. It's a main part of our real estate success system, isn't it? Don't you think, Marc? Not knowing how to raise private money. We're always
Well, yeah, I mean, it's definitely one of the core four, right? It's one of the main pieces.
Well, you think about it. You got to find a deal. So that's marketing. Yep. We're like the clearinghouse on the best marketing for finding deals. Okay, so marketing, finding deals. Then you got to fund it. So how do you fund it? Well, if you're using the ultimate strategy, you're funding it with private money and owner finance, and maybe subject to. So that's your funding. And if you buy it right, if you buy with terms, selling with terms, is that hard? Selling with terms is easy.
No.
See, wholesalers, people that are flipping, they're looking for cash buyers. So they have to build up a cash buyers list, and they have marketing for cash buyers. When you're buying with terms and selling with terms, selling is easy. Okay. And then what's left? Buy, fund, flip, sell. Then it's growing. It's leveraging yourself. It's that level 3. And then once we give all of that to people, Marc, through our trainings, our boot camps, which we have a boot camp coming up, and our coaching, what's the difference between someone who has all that? Well, you got two people. They both have all that. One person's kicking butt. And by the way, when I traveled across the nation, the country, I got to meet with Melvin Yates in Baltimore, Brian Rhodes, and Mark Gans in Virginia. And these guys are just kicking butt. These are our old coaching clients, right? So what's the difference between someone that is kicking butt and struggling? What's the difference if they have the same tools in training?
Action.
What prevents them from taking action?
Well, a couple things. Inner game, typically. Fear, procrastination, put obstacles, mental barriers.
Yeah, our coach Willie Hooks, he wrote a book, The Inner Game of Private Money. I mean, he's like an inner game master, right? And it is. Remember Coach Courtney used to be a poster child for someone who didn't have any private money, and she was so afraid, and we worked her through that, and then she became a guru in teaching private money. she became an expert at it. So yeah. All right. Anything else before we wrap this up, Marc? What else since you have experience raising money for deals, anything else that you want to contribute?
No, I covered everything I wanted to along the way. And I've been taking care of some questions. Do you want to open it up for Q&A?
Yeah, we can.
Anyone else have any?
So yeah, we'll open up for Q&A. So anybody, I'm kind of done covering what I wanted to cover. Hopefully you got some value out of this. If you got some value, go ahead and put something in the chat and say, yeah, Richard, thank you. Yes, no, you're a flake, whatever. And then, we can go ahead. If you want to ask a question, I'll check with Damien if he's still on and see if he has any questions. I got a thumbs up from Scott. Thank you, Scott. I see. I'm not even reading the chat, and I see the message. And then we can just have people on mute and ask questions. So, Damien, any questions we need to cover, or go ahead and open it up?
No, that's pretty good. I'll definitely flip back to that one page. I hadn't seen it yet, where you kind of showed the 3 examples of the mortgages. What the bank does, and then how your private money is positioned. Because my biggest question before tonight, going in, was how do you put together that presentation? So that was my biggest question there. But you had me go back earlier this week and listen to the private money section. I found the one in Free and Clear Cash Machine and listened to that. And your description of how you do your elevator pitch really clarified things for me. You know, it made it, just listen to how you said it as if you're talking to somebody. It's like, oh, well, God, I mean, it's total, the whole thing is mindset more than anything else. It's all mindset. It's like, yeah, I buy and sell houses using private money. What do you do?
So that was
They have to ask you to learn more. I mean,
no, that's good. And that was in the free and clear cash machine, module 6 on raising funds.
yeah, that's right.
Yeah. Covered the basics there. Yep. And oh, and that presentation, yeah, that's the napkin presentation with the boxes and stuff.
Right.
But really put together that Q&A lending tool, and you can use that as a discussion device or as something to send someone and discuss or something to go over. If it'd be great if they read it because it answers all their questions and explains the program, but people won't do that. So you have to sit down and just discuss it with them. And you don't have to go over everything. Just, cover the basics and then, but that is your presentation. I've already created it for you, Damien. The Q&A lending tool. We've had other clients and students create, slide presentations, and they'll show a slide presentation, or maybe they'll have a lunch and they'll show a slide presentation. There's nothing wrong with that. But if I was to do that, I would just use the Q&A lending tool. That would be my presentation. So that is my presentation. What other questions we got? Scott.
Scott.
Couple questions. One is interest rates that we pay. Is we still need to pay like 7 to 8 nowadays?
No, it's whatever you think you can get. So some people say don't tell people a rate. Go ahead and ask them, well, what kind of return are you getting on your money now, right? And then so let's say they're getting 2%, right? Then you could ask them, would you be interested in getting 5, right?
Mm-hmm.
If I could show you how to get 5 on some real estate notes, that are backed up by lots of equity and property, and you got 5%, would you be interested in that? So you can negotiate that and feel them out. I think it's easier just to you go ahead and determine the rate, because you've heard me say this before, Scott. If you put your deals through the Ultimate Profit Generator software and you're calculating the cost of your money, including any points, if it's, like a hard money, and any interest, if you pay more, then you buy for less. If you pay less interest to your private lender, so you've cut your costs, you have 2 choices. You can pay the seller more and hit your target profit, or you can increase your profits. See? But basically, your private money is free because the seller pays for it. The more you pay for private money, the lower your price. The cheaper your money, the cheaper your funding, the more deals you can get accepted because you can pay higher prices, right? So yes, it's good to get as low as possible, but what do you want your program to be, Scott? Why don't you go ahead and pick a number? What do you want? You want to offer?
I don't know. I was going to ask Mark. He's done private money in the past, and what are you doing today?
It oftentimes it depends on the deal, and it depends on the position that the lender is going to go into. So I focus right around 10%. So I'll pay 8 to 12, but that's a big range. So it just does depend on the deal.
Yeah, you can almost, when we do our deal structuring, sometimes we just use 8 or 10%. If you use 10% and then you do a deal based on planning and pay 10%, and then you get it for 6% or 8%, then you just make more money. So you could do that. You could use 10% as your, kind of your, for structuring your offers.
And to take care of your hard money or your private money lenders, you want to pay them a decent amount, right? So they're happy and they will refer you when you're done.
Well, let me ask you, Scott, where can you go out and get a safe 6% return on your money now?
Nowhere that I know of.
Mark, Where can you get
No.
6%?
I mean, so secured to real estate or secured, just secured? No, you can't get that. I mean, a lot of objections I get are, well, I can make 14% in the stock market, right? And so I'm like, okay, well, that's volatile, right? Is it secured? If it goes to zero, do you get your money back? You know, so those are in people's minds, right? That's the only other investment opportunity is the stock market, or the biggest, you know, focus. So people are always thinking, well,
Yeah.
gosh, you know, this year I've been making 12 or 14% or 16% in the stock market.
Yeah.
And so that's the objection that you get. And so then I always follow that up with, well, is it secured to real estate? Is it in a well position? You know, is it in a safe, you know, it's safer, which is safer,
Yeah.
you know?
What I would do is I would agree with them. Yeah, those are great returns. It's always good when the stock market's going up. You know, and I remember the days when it went down. Were you there when it went down? You know, just maybe fill them out because it averages lower, right? They don't look at that, but it's like that's good because the higher the return you get, typically the more there's some risk there, right?
Right.
You can't rely on that. And sometimes people just get lucky because they're going with the market. The market's going up. What I do is I don't like to speculate. I like, especially if money that is like your nest egg, your savings for the retirement, you know, your retirement money, your savings, you know, you have your investment money that you can play with. But yeah, what I do is I use money for people where they want it. They're more conservative. So I tell them it's a conservative place for some of their money. Right. But I offer 8% on the first, 10% on the second, and people will wait for a second mortgage just to get the 10%. They want, you know, I got a first for 8%. Well, I really want 10%. So sometimes I might just go ahead and give them 10%, or I'll just wait, you know, put them on a second. People like the 8 to 10% is very attractive, Scott.
Oh yeah.
Yeah. So I would just do that until you have a reason to do something different.
Another question. Any suggestions on where custodian for IRA type funds these days?
Trustetc.com
Still them? Okay.
and Entrust, and there's some other ones. Marc, do you know?
I've been using New Direction. They're out of Colorado, smaller company. I'm not sure if Entrust is around still. ETC, some of my clients use ETC. They're pretty big. Every custodian has some complaints about their custodian. So every client has complaints about their custodian. So some of my clients have been using checkbook IRAs. So that's a different, you know, way that you can manage your own IRA. And, you know, that's a big discussion. I can't really get into it right now. But some of my clients use that and they like that a lot more flexibility, no fees, easy way to screw it up though. So that's the other problem is you can screw it up pretty easily. So anyway, checkbook IRA, you can look that up.
Yeah, I'm a little leery of those.
Yeah, I like New Direction, small company.
Thanks.
I was in Puerto Rico recently and I met Edwin Kelly. And he has his own IRA company, but I can't remember what it is. His name is Edwin Kelly. And maybe I'll get that information out to you guys and give him a call or something. But yeah. All right. Real good.
Cool. Any other questions?
Scott, we take care of you. Anybody else, go ahead and unmute yourself and ask your question. Otherwise, we'll wrap things up here. Damien, thank you so much, buddy, for helping out.
Yeah, thanks, Damien.
Absolutely. Great stuff shared tonight. Thank you.
Oh, good. And Marc,
Thank you.
thank you.
Shared a lot of great stuff today. Fantastic.
Yeah.
Yes. And Marc, I forgot that you're kind of an expert on raising private money, and I took all the air out of this. You know.
That's all right. This is your program. I'm just your sidekick.
I know, but heck. All right, real good. Looks like specializedtrustcompany.com, Edwin Kelly. Specializedtrustcompany.com. Cool.
Thanks, Scott.
All right. All right, guys.
All right. Well, thank you.
We are going to do our next monthly ultimate training webinar a month from now. We are going to announce the boot camp. We were going to do it next week. We pushed it out a week. Next week, we're actually going to do a platinum VIP alumni special event. Marc's working on letting people know about this. I told you I met with some of our old coaching clients that are kicking butt. We are in touch with a lot of our old family, people we've known for a long time. These are really super sharp people. We're going to get them together so they can kind of have a reunion, and we'll see if we can let you guys in on it. Maybe it's like going to be a little party. And then Coach Willie Hooks said he was going to join and maybe share some stuff that he thought would be good for these, superstars, people that have been doing it for a long time.
Yeah, so more information on that coming soon.
So more information coming on that soon. And then, so the next thing is my open Q&A call. So normally these webinars and the open Q&A call every Tuesday are for paid members, but for December and January, I've been, kind of publishing them. Right now we're broadcasting on Facebook, but that stuff will change. So enjoy. I hope you got some value. Let us know how we can help you. Take care. Have a great night, and we'll see you next week. Thanks. Thanks, guys.
Thank you.